In the early 21st century, a new power bloc emerged on the global stage: BRICS. This coalition of nations has since become a formidable force in international politics and economics, challenging the status quo and advocating for a more balanced global order. This acronym stands for Brazil, Russia, India, China, and South Africa. Each of these countries brings unique strengths and resources to the table, making BRICS a diverse and dynamic group. These 5 nations represent a significant portion of the world's population and economic activity. Together they account for over 40% of the global population and nearly a quarter of the world's GDP, making their collective influence substantial. They came together with a shared goal in mind. By uniting their efforts, they aim to foster economic growth, enhance political cooperation, and address common challenges such as poverty and inequality. BRICS nations aim to reduce their dependence on the US dollar. This strategic move is part of a broader effort to assert their economic sovereignty and mitigate the risks associated with dollar-dominated financial systems. This ambition has sent ripples through the global financial system. Analysts and policymakers worldwide are closely monitoring BRICS's actions, as their success could redefine international financial norms. It challenges the long-standing dominance of the US dollar in international trade and finance. If BRICS can establish a viable alternative, it could lead to a more diversified and resilient global economy. The formation of BRICS in 2009 marked a turning point. This alliance signaled the rise of emerging economies and their intent to play a more prominent role on the world stage. It signaled a shift towards a more multipolar world order. The traditional dominance of Western powers is being challenged, paving the way for a more inclusive and representative global governance structure. The US dollar has long been the world's reserve currency. This status has afforded the United States significant advantages, including lower borrowing costs and greater geopolitical influence. This gives the US significant economic and political leverage. However, the reliance on the dollar also exposes other countries to US monetary policy and economic fluctuations. BRICS nations seek to create an alternative. By developing their own financial mechanisms and trade agreements, they aim to reduce their vulnerability to external economic pressures. They envision a system where the dollar is not the only game in town. This could lead to a more balanced and equitable global financial system, benefiting a wider range of countries. The world is watching closely to see how this geopolitical drama unfolds. The success or failure of BRICS's initiatives will have far-reaching implications for global trade, finance, and diplomacy. The concept of BRICS was first coined by economist Jim O'Neill in 2001, highlighting the potential of these emerging markets. His analysis underscored the growing economic power of these nations and their potential to reshape the global economy. The first formal summit took place in 2009, where leaders discussed economic cooperation and mutual development. This meeting laid the groundwork for future collaboration and set the stage for BRICS's ambitious agenda. Over the years, BRICS has launched several initiatives, including the New Development Bank, to fund infrastructure and sustainable development projects. These efforts aim to address critical needs in member countries and promote long-term growth. These efforts underscore their commitment to reshaping the global economic landscape. By working together, BRICS nations hope to create a more balanced and inclusive world economy, where all countries have a fair chance to prosper. The BRICS nations are actively pursuing de-dollarization, a strategic move to diminish the global dominance of the US dollar. They aim to reduce reliance on the US dollar for trade and finance, which currently underpins much of the global economy. Strategies include creating a shared currency backed by commodities like gold, which would provide a stable alternative to the dollar. The proposed BRICS currency, called the unit, is still conceptual, but it represents a significant step towards financial independence. The idea has gained traction among member states, reflecting a collective desire to challenge the status quo. They also promote trade in their own currencies and explore alternative payment systems, aiming to diversify their financial interactions. The world watches to see if BRICS can reshape the global financial order, potentially reducing the dollar's hegemony. Specific strategies include bilateral trade agreements that bypass the dollar, fostering direct economic ties between member nations. They are also investing in digital payment systems and blockchain technology, which could revolutionize cross-border transactions. The BRICS Development Bank funds infrastructure projects to boost economic independence, supporting sustainable growth. These policies challenge the dollar's dominance and aim to create a multipolar financial world, where power is more evenly distributed. The United States is not sitting idly by, as it faces one of the most significant economic challenges in recent history, as BRICS challenges its economic dominance and seeks to create a multipolar world order. The U.S. government recognizes the potential threat posed by de-dollarization and the shift towards alternative currencies. It is taking steps to counter these efforts and maintain the dollar's supremacy through a combination of diplomatic, economic, and strategic measures. One of the key strategies employed by the U.S. is strengthening its alliances with traditional partners to ensure a unified stance against BRICS. The U.S. is reinforcing its relationships with G7 nations, the European Union, and other key allies to build a robust economic and political network. This involves deepening economic cooperation, negotiating trade deals, and coordinating policies to present a united front against BRICS ambitions, and to safeguard mutual interests. By bolstering its alliances, the U.S. aims to maintain its influence in global institutions and counter the growing economic clout of BRICS, which seeks to reshape the global financial landscape. Another tactic employed by the U.S. is the use of trade wars and sanctions to exert economic pressure on rival nations. The U.S. has imposed tariffs and trade restrictions on several countries, most notably China, to curb their economic growth and influence, in an attempt to hinder their economic growth and discourage them from challenging the dollar's dominance. In the global market, the Federal Reserve plays a crucial role by adjusting interest rates to control inflation and stabilize the economy, ensuring the dollar remains a reliable store of value. The U.S. Treasury Department also implements financial regulations and policies to protect the dollar's value and to prevent economic instability. Additionally, the U.S. is investing in cybersecurity and exploring digital currencies to stay ahead in the financial technology race and to secure its economic future. The outcome of this economic rivalry will have far-reaching consequences for the global balance of power and will shape the future of international relations. Internal rifts within the BRICS alliance. While the BRICS nations share the common goal of challenging the US dollar's dominance, the alliance is not without its internal divisions. These divisions stem from various economic, political, and strategic differences that each member brings to the table. These internal rifts could potentially hinder the bloc's ability to achieve its ambitious goals. Disagreements on policy directions and economic strategies often lead to prolonged debates and delays in decision-making. One of the most significant challenges is the economic imbalance among member states. This disparity affects their ability to contribute equally to joint initiatives and projects. China's economy dwarfs those of the other BRICS members. This economic might gives China a dominant position within the alliance, often leading to a disproportionate influence on the group's agenda. This creates a power dynamic where China's interests often take precedence. Smaller nations may feel sidelined or pressured to align with China's policies, even when they conflict with their own national interests. This imbalance can lead to resentment and mistrust among the smaller members. Such feelings can erode the unity and cooperation needed to present a strong front against the US dollar. Political tensions also exist between certain BRICS members. These tensions are often rooted in historical conflicts and ongoing geopolitical rivalries. India and China, for instance, have a long-standing border dispute and a history of mistrust. This animosity can spill over into their economic and diplomatic interactions within the BRICS framework. These tensions can spill over into economic cooperation. Joint projects may be stalled or derailed due to underlying political disagreements. Brazil and South Africa have also expressed concerns over their roles and influence within the alliance. They often feel overshadowed by the larger economies and struggle to assert their interests. Russia and India often have differing economic policies, which can complicate unified strategies. Their divergent approaches to trade, investment, and economic reform can create friction within the group. The complex transition away from the US dollar presents another challenge. Establishing a new currency system requires extensive coordination and trust among the members. Shifting to a new currency or a basket of currencies is a daunting task. It involves not only technical and logistical hurdles but also the need for political will and economic stability. The BRICS alliance, while ambitious, faces an uphill battle. Overcoming these internal rifts is crucial for the bloc to present a united front and achieve its goals. The success of BRICS will depend on their ability to overcome these challenges. Only through cooperation and mutual understanding can they hope to challenge the dominance of the US dollar. The uncertain path of de-dollarization. The path to de-dollarization is fraught with uncertainty, as it involves navigating a complex web of economic, political, and social factors that can change rapidly. While BRICS nations are making strides in reducing their reliance on the US dollar, the process is complex and gradual, requiring significant coordination and cooperation among member countries. There is no guarantee that they will succeed in dislodging the dollar from its dominant position, as the US dollar has been deeply entrenched in global trade and finance for decades. Several factors will determine the outcome of this economic tug-of-war, including geopolitical alliances, economic policies, and the resilience of the US economy. The stability and reliability of any alternative currency or payment system proposed by BRICS will be crucial, as businesses and investors seek assurance that their assets will be secure. For businesses and investors to abandon the well-established US dollar, they need to have confidence in the viability and stability of any alternative, which requires robust financial infrastructure and transparent governance. If the new system is perceived as risky or unstable, it is unlikely to gain widespread adoption, as market participants will be wary of potential losses and disruptions. The response of the United States will also play a significant role, as American policymakers may implement measures to protect the dollar's dominance and counteract de-dollarization efforts. The US is unlikely to cede its economic dominance without a fight, and may leverage its political and economic influence to maintain the dollar's central role in global finance. The willingness of other countries to embrace de-dollarization is another key factor, as global cooperation and consensus are essential for any significant shift in the financial order. BRICS alone cannot dictate a shift in the global financial order. They need the support and participation of other major economies to create a viable alternative to the US dollar. The path to de-dollarization is long and winding, filled with numerous challenges and obstacles that require strategic planning and persistent effort to overcome. The world is watching closely to see how this economic drama unfolds, as the implications of de-dollarization could reshape the global financial landscape. The potential risks include market volatility, economic instability, and geopolitical tensions, which could have far-reaching consequences for both developed and developing economies. However, the benefits could be significant, such as increased economic sovereignty and diversified global trade, which could lead to more balanced and equitable economic growth. The shift could lead to a more balanced and multipolar global financial system, reducing the risk of over-reliance on a single currency and promoting greater financial stability. Ultimately, the journey towards de-dollarization is a high-stakes gamble with profound implications for the global economy, requiring careful navigation and strategic foresight to achieve a successful transition. A new dawn for global trade. The BRICS challenge to the US dollar's dominance has the potential to reshape global trade in profound ways. By creating a new financial ecosystem, BRICS nations aim to reduce their reliance on the dollar, which has long been the cornerstone of international trade. If BRICS succeeds in creating a viable alternative to the dollar, it could lead to a more multipolar trading system. This system would allow for greater flexibility and resilience in the face of economic shocks, as countries would have more options for conducting trade. This would have both opportunities and challenges for businesses and economies worldwide. Companies would need to adapt to new currencies and financial regulations, but they could also benefit from increased market access and diversified revenue streams. One potential benefit of a more multipolar trading system is reduced dependence on the US dollar. This could lead to more stable and predictable financial environments for businesses operating in multiple countries. This could insulate businesses from fluctuations in the dollar's value. By using a basket of currencies, companies could hedge against risks and reduce their exposure to any single currency's volatility. It could also reduce the impact of US economic policies on other countries. Nations would have more autonomy in setting their own monetary policies, leading to potentially more balanced and equitable global economic growth. A multipolar trading system could also lead to increased competition and innovation in financial services. Financial institutions would need to innovate to stay competitive, potentially leading to new products and services that benefit consumers and businesses alike. With the dollar's dominance challenged, new players could emerge, offering alternative payment systems, currency exchange mechanisms, and financial products. This could democratize access to financial services, especially in developing countries. This competition could lead to lower costs, faster transactions, and greater choice for business. And seize opportunities in this evolving environment. The BRICS challenge to the dollar has the potential to usher in a new era for global trade. This new era could be characterized by more equitable economic relationships and diversified sources of growth. Innovations such as blockchain technology and digital currencies could revolutionize how transactions are conducted. These technologies could enhance transparency, reduce fraud, and streamline cross-border payments. Economic shifts towards sustainability and green energy could also be accelerated, as new financial systems support eco-friendly initiatives. This could lead to more sustainable development and a reduction in the global carbon footprint. Emerging markets could see a surge in entrepreneurial activity, driven by easier access to capital and innovative financial products. This could foster economic development and job creation in regions that have traditionally been underserved by the global financial system. Ultimately, a new dawn for global trade could mean a more inclusive and dynamic global economy, with opportunities for growth and collaboration across borders. This could lead to a more interconnected and prosperous world, where economic benefits are more widely shared. Gap 3S, Shaping Future Global Economic Policies. In this section, we delve into the potential transformations in global economic policies driven by the BRICS alliance, examining the various scenarios and their implications for the world economy. As the BRICS alliance gains traction, its influence extends beyond trade and finance, potentially reshaping global economic policies. This shift could redefine international relations and economic strategies, impacting countries far beyond the BRICS members. Experts predict several scenarios that could unfold, each with its own set of opportunities and challenges. These scenarios highlight the dynamic nature of global economics and the pivotal role BRICS could play in the future. Scenario 1. A collaborative framework. This scenario envisions BRICS nations working together to create a unified economic policy framework, fostering cooperation and mutual growth. In this vision, BRICS nations work together to create a unified economic policy framework. This collaboration could lead to more synchronized economic policies and a stronger collective bargaining power on the global stage. This cooperation could lead to new international standards for trade agreements, investment protocols, and financial regulations. Such standards would streamline international transactions and reduce the complexities of cross-border trade. Such a framework might prompt other nations to adopt similar policies, fostering a more cohesive global economy. This could result in a more integrated and efficient global market, benefiting businesses and consumers alike. Scenario 2. Regional economic hubs. In this scenario, BRICS countries might focus on strengthening their regional influence, creating powerful economic centers within their respective regions. Alternatively, BRICS countries might focus on strengthening their regional influence. This approach could lead to the development of robust regional economies, each with its own unique strengths and policies. This approach could result in the formation of powerful economic hubs, each with its own set of policies tailored to regional needs. These hubs could drive regional growth and innovation, creating new opportunities for businesses and workers. While this might lead to a more fragmented global economy, it could also encourage regional innovation and resilience. Regions could develop specialized industries and technologies, contributing to a more diverse and resilient global economy. Scenario 3. Policy divergence. In this scenario, the BRICS alliance faces internal conflicts leading to divergent economic policies. These conflicts could arise from differing national interests, economic priorities, and political agendas. Such divergence could create a complex web of regulations, making international trade and investment more challenging. Businesses would need to navigate a maze of different standards and regulations, increasing operational costs and risks. Businesses would need to navigate varying standards and practices, potentially increasing costs and risks. This could lead to inefficiencies and slowdowns in global trade, affecting economic growth and stability. Experts are divided on which scenario is most likely. Some argue that the collaborative framework is the most beneficial, while others believe that regional hubs or policy divergence are more realistic outcomes. Some believe that BRICS will successfully forge a collaborative framework, while others argue that regional or divergent policies are more probable given the diverse interests of member nations. The outcome will depend on the ability of BRICS countries to align their goals and strategies. Regardless of the outcome, one thing is clear: the rise of BRICS will have a profound impact on future global economic policies. The decisions made by BRICS leaders will shape the economic landscape for years to come, influencing global trade, investment, and development. The world is watching closely as BRICS navigates its path, with analysts and policymakers keenly observing the alliance's moves and strategies. And the decisions made today will shape the economic landscape for decades to come. These decisions will determine the future of global economic governance and the balance of power in the international system. Specific policy proposals include the establishment of a BRICS development bank to fund infrastructure projects, a unified digital currency to facilitate trade, and a coordinated approach to environmental regulations. These initiatives aim to enhance economic cooperation and sustainability among BRICS nations. These initiatives could streamline transactions, reduce trade barriers, and promote sustainable development across member nations. By adopting these policies, BRICS could set new standards for global economic governance. The potential impact of these policies is vast, potentially leading to increased economic stability, growth, and a more balanced global economic order. The success of these initiatives could serve as a model for other countries, encouraging broader international cooperation and development. The future of global financial dominance. As we look ahead, the landscape of global finance is poised for significant transformation. The battle for global financial dominance is well underway, with major players vying for influence and control over the world's economic systems. The US dollar's reign is challenged by BRICS and Dedollarization efforts, as these nations seek to reduce their dependency on the American currency. The dollar still holds significant advantages, including its widespread acceptance and the stability of the US economy. BRICS has momentum and growing economic clout, driven by their collective resources and strategic partnerships. A more multipolar world order is emerging, where power is distributed among multiple nations rather than dominated by a single superpower. The world is entering a new chapter in global finance, characterized by increased competition and innovation. Potential scenarios include a shift towards digital currencies and blockchain technology, which could revolutionize how transactions are conducted. This could decentralize financial power and reduce reliance on traditional banking systems, making financial services more accessible to a broader population. Emerging markets may gain more influence, reshaping global economic policies and driving growth in new regions. The implications for global economies are profound, potentially leading to more balanced economic growth and reducing disparities between nations. The future of global financial dominance is uncertain, but change is inevitable. As nations adapt to new realities, the global financial system will continue to evolve, reflecting the dynamic nature of international economics.